Hi, this is Elliot WaveSage. I want to go ahead and do a market update. Like always, none of this is financial advice. Always do what's best for you. Use this for your education and entertainment purposes only. So the market the last few days has decided to finish this connector wave at a higher degree. Uh, we've mentioned this scenario in my other videos where we could see an expanded flat Elliott wave pattern or a flat pattern. So just keep that in mind. This is what I think we're morphing into in the Dow Jones. We're finishing up this leg, and once divergence erases, then this leg in C can end at any moment. As you can see, we have taken out all the peaks in RSI, so the divergence is erased, confirming the C leg is higher, the weekly as well. So where are we on the actual leg? So we're in still wave 3 of this C leg, so we should still extend higher after another small pullback. So the market should continue higher, and right now we're in a 3 that should end pretty soon, and then we should get a 4 and then a 5. That's how we should end, something like that. The 4 could be similar to what we saw down here, and then that should do it. What this pattern is setting up is a higher degree, and what this also did was avoid this scenario later. So we're going to get this correction over with pretty soon. Early in 24, it looks like this is where we're going to get this. We probably are going to be, looks like we're going to still push up a little bit, but then I think really next year is going to be tough. It looks like early next year is going to be pretty tough for some reason. And we could even start to see the reversal. I mean, technically, now that the divergence is erased in the daily time frame, the advance can end at any moment, and in fact, this can truncate, even though I don't see divergence in the 4-hour. So just keep that in mind. So this is great if you were able to hold through this. And in hindsight, this pattern makes a lot of sense because this is a clear, impulse. It's almost like symmetrical, like what we're seeing, almost seeing the same type of price action up. So even if we break the high or not, it's irrelevant. And actually a good thing if we break the high, because that would confirm the bull market will continue. The secular bull market will continue because we would get the rug pull, but by breaking the high, it usually guarantees that we would see another advance afterward. And we see this time and time again after these rug pulls. So breaking the high is very important for the historical trend of the market, I think. I think that would pretty much eliminate any possibility of, a massive bear market that will last the rest of our lifetimes. I believe what this will turn into on a much higher degree time frame is another impulse higher, higher up. Here you have a 1, 2, and you could label this 3, 4, 5, and then depending on how sharp this C goes, we could label this as a full impulse as 1, 2. And that's probably what is going to happen, what I'm thinking. So again, what I'm thinking, where we are on the long-term chart, is something, something like this, and then that, something like this that I have here. Because it's an expanded flat, this target goes away, and now the C leg can actually drop, as far as it wants to do it. It could even go back to this wave 4 low, which I think would be not I wouldn't be surprised. So obviously, whatever news will hit will be so horrific, so catastrophic. There'll be mass panic. And I don't know what that news is going to be. I don't know. I just can't. It's just the pattern setting up for it. We're hearing about this white lung disease going around. White lung disease, new ammonia, walking ammonia. Remember, we were hearing about stuff in February, back around here, and then look. I mean, could walking ammonia be like the uh-oh moment? I don't know. So we don't know. No one knows. No one knows the future. But I do think this market, this sequence does not look like a strong corrective bottom still. This is just a connector wave at a higher degree playing out. And it's really good trading opportunities. And there's that. But I think if you're just like, just gonna market buy, go long with your whole stack because you're gonna break out or whatever your issue, I think you are setting yourselves up for this. And but no, if we do break the high and you get caught in the flat, and I told you guys this on AHER, if you get caught in the flat because you just FOMO, you say you just can't help it. I got a FOMO in. I just can't do it. I can't do it anyway, Sage. I'm just gonna put all my stack in. This is I can't miss this. And if you get caught in the flat, as you will, if this happens, then you're gonna have to ride this thing all the way down because you're not gonna be able to trade in and out of it. You have to, and just know that, just like you saw here, it's gonna end. It will end by breaking the high. It is set and set up for higher highs in the future. But you're gonna have to just turn your computer off and go fishing or go do something else with your life for maybe the next 6 to 8 months. So that if you get caught in the flat, so if you got a FOMO in, I understand, because this is really exciting and it's hard to watch all the money being made and you're not in it. But it is a lot of people are going to chase here, and I do think scalping long positions and taking advantage of that greed, that FOMO on these pullbacks is just easy money to be picking up until some news drops. So any pullback is an opportunity to do that. And some people like to use calls on that. So I think there's a lot of money to be made as the herd comes in to buy and go long, because they just can't they can't wait. They just don't want to miss this move, and I don't blame them. It's exciting. But you have to understand this isn't an impulse. I mean, if you look at this structure right here, there's no impulse. It's a corrective structure. If you look here, you've got 5 swings down. I'm labeling it right now as an A. And I do that because there's no divergence. So A, B, and C. I think this here, whether it's 5 swings or is it 3 swings, it's not is irrelevant because there's no divergence. So to me, it's set up for a flat. It's setting itself up for flat, expanded flat. But keep in mind though, the expanded flat can extend to the 236. So that means it can go all the way up to here even. So you got to be careful shorting. I would not short this anymore. There's no shorts. And there's no reason to short this market anymore until you get the rug pull, and you'll know. Trust me, we'll be down when this thing reverses. I'm sure we'll be down a couple thousand points in one trading day. When you see a sell-off like that, then a Volmageddon event, then it's over. B is in. Until then, all these pullbacks I think are just dip buys and let this thing push, and it's going to surge, and I still think it's got more upside. And it could even tap this area right I have here. So just be careful if you're short. You should have closed your shorts. You should have stopped out, and you need to make sure you manage your risk. But if you're still short, you should have been stopped out by now. So how does the SPY look? Same thing. I look at this again. Here is really interesting with this divergence here. Again, this really is the tell to me that we're gonna have a rug pull. But what this is here, if I look at it, it could be 3 and 3 here. So I'm gonna label it that way for now. And stick with that in this WXY. And so we should get again a pullback like I have in B, which would probably be the wave forward down, and then get this C leg up. And it could go as high as 511 to finish it off, the expanded flat, but it could end as soon as this plays out and we erase the divergence. So I would be looking for that. It may not go this high, but I do think this is the pattern. but I do think it's due for this B coming in, and so I do think the market is due for a pullback, but I do believe this pullback could be a buying opportunity as long as it stays above. I'm thinking somewhere around probably this level 430s, but this would be pretty deep. I don't think it's going to do that. I think if it pulls back, it's probably coming back to 443, and then it should bounce back up there. So that's what I'm thinking with the SPY right now, something like this. Now, if we continue the surge and we erase this divergence on the daily and 4-hour, we don't get B, then B's already been in, and we missed B. B is like, you know, either here, and we're finishing up, or it's up here, and we're going into C. So, again, we don't know. We don't know for sure, but we do know that it does seem like the market needs more upside now that we broke the high. And the triple Qs, again, I'm looking that we already are in B. We have already completed the first impulse, and then this should be a dip to buy at some point, probably around 376 for this C, to finish it off. The triple Qs, again, you have the divergence, so you still need C to erase the divergence, and I believe we will. So the market, it looks like, do a pullback in this B, and then this wave 4, wave 4 here. Now, this could be another 1-2, right? It could still extend, so you got to be careful with the Dow. The way it's trading right now, it could turn into a 1-2, and then it could also turn into another 1-2. So you got to be careful with the Dow at the moment. But regardless, this leg of the rally needs a pullback. So we're going to get that pullback, and then whatever happens here, we should get one more high. So that's what I'm looking at, something like this. And then the Russell did break the high that we had, so it stopped out. Now, if you were a trade, how do you trade this and not lose money? Like, I barely lost any money on the trade, just time, wasted time. So you see, we had the buy-in here at 180.81. So I lost 0.3 of a point. It's nothing. So okay, but I did waste a lot of time. But it was worth the shot. So now what's going to happen? So the Russell I still believe the Russell will still make this thing down and break this low. I do believe we're in B, and we need to erase the divergence, and we have done that already. This looks like the connector wave, and in this three-leg move. So it looks like B should extend a little bit higher. And one way to look at this B is if you look here, look at this leg. You see this B here. I put A. A could go here, but you could kind of see this cluster. See, it kind of had a complex B. See, that's what we're in right now. We're kind of in this, and this took from February to March 28th. So like looks like about one month. So we're about at November 2nd. We're here about December 2nd. So this is probably ending pretty soon. And it kind of sucks. It did just enough to stop everybody out, and now it's going to rug pull. So the Russell, I don't. This is what I'm looking at now. There's other possibilities for the Russell besides what I'm showing here, where this connector wave continues on and morphs into a larger degree connector. So I don't like shorting it. I don't like trading it. I don't like going long it. It's just kind of fascinating to watch this play out. But if the day comes and we are down in somewhere in this area, this will be investment buy opportunity for a long-term investor. And if we're up here, well, then maybe we'll look at shorting it again. But right now in this area, it's just kind of like trader wars. And people that are confused, that don't know what to do, they're just going to buy and sell here. So this is just kind of the sidelines. This is my best guess at what I think the Russell is going to do at the moment. But you'll have to do what's best for you. All right, so that's the indices, guys. So we've always talked about this possibility And it looks like that's what's playing out. The market's going to play this out, and yeah, it's create the FOMO, and I know it's exciting, but you have to just know what you're that there is a trap being sprung, that will be sprung at some point, like all flats, and when it happens, there'll be a rug pull. And I always go back because AEHR was a great example of that rug pull. We predicted it just like we're predicting it now with the indices with AEHR. Okay, and we have to trade right here still, right there. So we have, look, the same pattern. A, B, look, B broke this high. Okay, B broke this high. But you see this wave? It's three waves, just like the Dow is going to be. And look, from here to here, look at the gap, look at the excitement. And then what happened, guys? What happened? Rug pull. And then what happened here? I said buy it. That's why I have this here. And then look, the trend continues. So my point, what I'm trying to say with the Dow is, and the indices is, you're going to get this. This is coming even if this breaks these highs. So just think AEHR when you're trading the indices. If you just can't help yourself, and I'm like, I got a market buy, I'm missing out, just know you could be buying up in this, like something similar to buying AEHR here. And when you're in this, you gotta, like someone on my follow me was trapped in this, and you're just gonna have to ride it out, man. If you get trapped, because you're not gonna be able to trade in and out of this type of price action. But just know that that's what's gonna happen, and then you'll have a great chance to get in. And there's really no good, like once that rug pull happens, you won't go wrong because you just can wait it out, because by breaking the high you guarantee the leg up, so which eventually did come, because I remember this looked hopeless down here, right, for AHR. It was like hopeless. Something had their CFO resigned or something. It was hopeless. But look, I guess it wasn't so hopeless, because we did well. So I think the indices is just going to follow the same pattern. And that's the ultimate destroyer of bulls and bears. It always is. The flat, the expanded flat, is a trading pattern that destroys a lot of traders, destroys leverage, and destroys both sides of the market equally. And so you just gotta hang in there and see how this plays out. But this is what I'm thinking, my best guess. But I would keep an eye on the RSI, and if the RSI erases divergence here, then it could truncate at any moment, and then what I'm showing may not happen, and this B could happen at any moment, and the swings are done. So just keep that in mind. So the only one that I saw do that was the Dow, right? Yeah, the Dow. So the Dow, could it do that? And then first, it's possible. I don't think so, because again, this doesn't look like it's finished. It looks like three waves to me. What would be really evil is if this is a different look. So there's another alternative that you need to be aware of that I was looking at. We can go back to this being three waves. So if I go back and change this, there is a more sinister pattern out there where we're still in X, and then we get this Y later, and we still get B later. And then you don't get just like a little bit of up and down. You get something that annihilates the market, and it does something like this and get X that way. Obviously not favored. It's an alternative scenario. If we get into this wave, the way this would have to go down would be dramatic panic selling, like March 2020 type, to get so there'll have to be some massive news drop to get that to happen. So I don't think that's the favorite count, but I show it just so you know and are aware that there's other possibilities, and that's the thing, there's always other options out there when it comes to the Elliott waves. All right, so what's Bitcoin doing? Again, I've been saying, hey, this is my sell area, and we're pushing up. We're close. We're almost there. We're close. But man, it's really having a hard time. Could be a 1-2-1-2 ready to break out in a nice little burst higher. But this could end at any moment too, by the way, just so you know, Bitcoin. Oil's in the danger area, guys. Again, this is why the market, you gotta be careful FOMOing in the market because oil's telling you the market may be ready to have a deflationary sell-off for some reason. Now, this could be perceived by the market as bullish, right? At first, and then some other thing later. So just keep this in mind, but this is where we're going with it. I do believe this X looks like it's finished. Now, if not, we could still be in B, but I think it looks like we should be, once we break the 72, that should push us down. Nat gas is kind of hanging in there, hanging in there. And then gold, obviously it's breaking out. So gold is doing this, finishing up this wave 5 here that I have to 2300. So gold is a good long. So if you really want to FOMO, if you're like, hey, I got to buy something, buy gold. So what did I buy recently? GDXJ, because you saw the breakout. So, but don't buy just something because I bought it, because I can't be wrong, and knowing my luck, it'll just crash. Gold will crash here, but it does look like gold's going to have a breakout. And again, this wave 5, this could become another 1-2, 1-2, and it could go way past what your imagination thinks, because we're having a historical breakout in gold if this happens on a pattern that goes really back to 2011. So I mean, we could be talking 4,000 at some. So I would say, hey, FOMO in the gold. FOMO in the gold. Why not? Because I mean, if the market's going to go up, gold's going up. And if the market's going down, well, it looks like gold's still going up. So it looks like gold's probably the win-win trade, the no-brainer. And now that we know that this is the pattern, right? We pretty much know the corrections. I think it's safe to say is over. So now there's a lot of money to be made on the upside. Even if it pulls back, this dip's gonna be bought now. I mean, these dips are gonna be bought. So even if it decides to drop again, that's just bought. I would be aggressive in buying it, because this is too strong. It's too many taps at resistance. 1, 2, 3. If you got 4 taps, it's breaking through, guys. So gold, I do like gold long, and of course, if golds go long, then silver. And silver has got a clean breakout now of its correction. So I think, again, you can negate this scenario, and we're looking at the expanded flat scenario that played out. So that's good for the precious metal market. And you have look. You haven't missed the move. I know it seems like you missed the move in silver. Believe me, you haven't. The move hasn't even started. So, if this is the count, I mean, you're not even in the first inning. You're like in the first out of the first inning. Like this is saying that our financial system's got massive inflation coming. That's what this is telling me. I mean, that's what this is, this chart. Because there's no way gold and silver is going to surge in these wave 3s, super cycle, grand super cycle wave 3s, which looks like it's starting to develop in and not be inflationary. It just doesn't make sense to me. The only way the market could go up with this happening in this inflationary scenario would be hyperinflation, like a Venezuela like situation. A Zimbabwe situation, but we would see the dollar collapsing, and we don't see that quite yet. We see the dollar finding support where I said it would in this area, and it's bounced, and I do believe we're going higher. So I think the market's going to sell off, guys. And I hope I can't, and yeah, we may get this little blip here like I have, but then again, if it can erase divergence early next week, then the B's in. So there, it's in some ways it's good that we need to get this over with, because I really didn't want to have a big sell-off into December and then have another pump. And it's good because we just need to get this rug pull over with, because by the time this is done, this should be plenty of time before the election. This will probably be over by April or so, March or April, and then we can get back to things. And then breaking the high is also good for the historical market. If this doesn't break, then the super bearish, the people that think, Dow, 10,000 or whatever, that's still alive. But once that breaks, I don't think that's possible anymore. It would be the only way that pattern would play out, like those guys always going to go back. It would have to be this sea leg would have to go take you all the way down the here. So it'd have to be like what the Yellowstone super volcano blew up and the United States is gone. Like you'd have to have the market do something like this. The pattern would be like that now if we break this high. So it's not realistic unless there's, you know, nuclear holocaust is coming, or this white lung disease starts killing everybody, 80% fatality, which it doesn't. But I mean, that's what you're talking. So if we break this high, this will just finish this correction, which will be nice, and I think it will be the correction for the whole cycle, the whole cycle, and I think that will also guarantee an extension for a long time, which would be good. Where could we extend to, right? Where could it go? If it finished somewhere around here, we'd probably see down 100,000. That would be the next sell off. I would, if we got this pullback like this, I probably would buy as an investor and wouldn't sell the Dow 100,000 or more. And that would be it as an investor. It would be equities would be a really good investment, especially breaking this high. That would definitely give you the confidence to buy the dip. If we don't break the high, then the super bearish scenario I think still stands, and then I think there's more risk. Then you're taking a little bit more risk buying this pullback here and see when it comes. But for now, we'll worry about one thing at a time. Now, the other thing to keep in mind is we're having this great excitement, higher highs, but I think the Magnificent 7 is divergent, right? They're not breaking the highs. They're actually still correcting. So the market will, I promise you, the market cannot accelerate higher if these stocks, the Magnificent 7, are not, they're not making new highs. It just isn't going to happen, guys. This is a warning sign too. The divergence there. I mean, you got divergence. Tesla, look, is playing out just like we have it here. I mean, look, guys, I gave you this on my last video, a short here. I said this is it, and boom, and here we are. And then look, oh man, a face ripper coming. And yeah, probably is coming. Now, could it be truncated? I don't think so. I still think you got one more push lower. Despite whatever happens here, this is probably just a connector within this decline. But anyway, this is Tesla. So you got this coming. So if this is coming, the market should still go higher. Now, what we need to look at for Tesla here. Yeah, see Tesla. So Tesla, we gotta be careful. So Tesla, there's still too many options, because when I had this drawn up, I was expecting a bigger pullback and then a pump to potentially new highs later. So this may not happen given where the market is now. So I think in Tesla, what we may see is a this B wave extends. So I'm gonna just kind of give you a different view on this now. Something like this, maybe. So I think if you're in this short, you should close it. It's just my opinion. Take the money and run because you got the divergence is erased. So yeah, I think, and given where the market is, I think you're going to get this Y, just like this. So I think Tesla is gonna pump here, guys, because of how it lines up where the market is, and I think this is just truncating here in a three-wave connector. So this is kind of what I'm thinking for Tesla. I know everyone loves to trade Tesla, but I think this is what I'm thinking. And then when it gets up to like 269, 270, boom, rug pull. So that's what I'm thinking. So get ready for this. So I think. So you guys are always like, oh, let's pump it. I want to buy calls. Well, this is one. Could be one to buy calls. And you can kind of see it's already turning, right? It's already starting to turn with some of these candles, right? It's already starting to turn. It looks like the downtrend is breaking here. Already broke. So I like Tesla long. So that's what this is going to help support the market. How's AMD doing? Yeah, see, it peaked out. How's NVIDIA doing? Not good. Still peaked out. So see these guys. Now if the market cannot excel. These guys have to be participating. And guess what? Where did we see this divergence last time home? Deja vu, when the correction started in November 2021, right? The tech corrected first. Everything surged, and then January came, and then everything rolled over. But tech peaked in November. So just remember that. So this is a warning sign to the market as well that don't get too euphoric, because if tech can't make new higher highs and the Dow and the Russell are pumping, and remember the Russell's nowhere near higher highs, but even if the Dow makes a higher high, all-time high, that's just good for the historical trend. That's all that means to me, and it gives me more confidence to buy the dip when it happens. Microsoft hit the sell area in the expanded flat target, and that now it's in danger. So let's look at Microsoft. So this was the expanded flat target. It looks pretty convincing, like it's 3, but we need to check divergences and see. It's a tie. So I guess you could say it broke it, and the daily broke it. So you're good. So this is a 3-wave move that should be. If this is the right count, it should be over. And what does that mean? Rug pull time. But it's going to take time to play out, right? It's going to take time to play out. So the Magnificent Seven is running out of gas, guys. It's running out of gas, and you can go back to the technology and where are we with technology? Again, I'm still looking for this B and a C. This can't happen if the Magnificent Seven won't make new highs. So is it possible that the B truncated, it is done? The only way that's possible is if divergence is erased. Well, the 4-hour you did, and the daily time frame you have not. So the chances of it truncating here is not likely. So the only thing I can think of is this correction in B may be deeper, and then C may not, may be shallower, and then this could allow the technology stocks, like let's pick, like we were talking about here, let's say like a Facebook, for example. A Facebook, this would allow a Facebook to potentially maybe finish an impulse, right? Finish an impulse, and then when it rallies up, it doesn't break this high. It doesn't break this high, but the triple Qs break the high for whatever reason. So that's what I'm thinking, and for that to happen, we probably need a deeper B. The other alternative is it just truncates anyway, and I'm wrong, and it's already tech's already started its final leg lower. If this has happened, that means the 10-year bond should be starting to rally. But I don't think the 10 years done. Rates going down yet. Looking at what happened today with the 10-year. So this was B, and now we're in C. So again, I have this final target at 386. So that's probably where we're headed. But again, so I think, it's interesting that this is rates are falling and the Magnificent Seven are not rallying. That's a divergence. You would think that would help tech, all tech, but it's not helping all tech. It's definitely helping a lot of other stocks, with their valuations, but this C should end. It could end at this trend line at 4, but it could still go lower. So I do think what interest rates are telling me is that the bond market's still going lower. But I do think when this 2 set, then we should be ready to go with the wave 3. So that's what we're looking for. And again, we're just correcting this advance. That's all we're doing. But it's providing a lot of rocket fuel for the market and a lot of it's a false signal. It's like disinformation for a fundamental trader. Because a lot of people are reviewing this as a sign of everything's all clear, but it's actually just a wave 2. So what that means, what's coming. And the reason we know that, because we made a higher high sequence here with a corrective structure. So this pullback should be supported and come to an end. Ideally, this will be where it ends on the trend line, right here at 4, and won't make it. But if it comes down, it'll probably wick up. So this is the area. So where can the market reverse? Probably around this area. you could probably see a lot bigger reversal. But for right now, this is what I'm looking at. The VIX, still is struggling to drop any significance here. Again, if I'm trying to Elliott wave it, it still looks like it needs a 1-2, 1-2. It looks like it's still got another push lower in 5. Again, if I'm trying to do an Elliott wave count on the VIX. But this is coming to an end, guys. This is coming to an end. And yet, this is what's coming. So just be ready for that. What goes up, what comes down. So there's always cycles. Nothing lasts forever. And a lot of people forget that. These cycles come and go. All right, so I covered a lot tonight because there's a lot to talk about, and there's a lot going on underneath the hood of the market. But you have to keep the big picture in mind and understand, what's going on. But it does feel good, and I do think there are definitely buyable dips in trading, in day trading, day trading pullbacks like what happened today. I think there's going to be more of that when the news drops. It'll be so obvious to everyone. The market, the volatility surge. It'll be just like the Volmageddon event, 2018. It'll be the same thing. So it will be obvious. So if you get these little pullbacks and come in, they're probably just going to be even up and bought up, and the market's just going to keep pushing higher until something drops. And then when that news drops, it's going to be a massive rug pull, and depending on the degree of the rug pull, will dictate the cycle of where we are. So, but anyway, so what do you do? Like, let's say, oh man, I've been on the sidelines. What do I do? How do I do this? I'm like, well, I like gold and silver, and I think those are just starting to break out, right? I mean, I do think like GDXJ was an easy breakout trade today. I mean, I was just like, there's your downtrend line. You just broke out of it. So this is done. This correction is over. So the GDXJ is a good trade, and if this is the count, you've got a 1-2, 1-2, 1-2. So you could have a 10 bagger in the next, maybe 5-6 years. So it's a good investment. So I'll put some money to work, right? It's just time to put money to work. This is good. This is where if you didn't buy anything, this looks like something that maybe is worth picking up, right? Gold, silver, right? Because it's made its move. It's tipped its hand. We weren't sure early in the year what was going to happen, so there's more risk. Now it's like pretty clear. So even if the market tries to do a Wyckoff spring, whatever, and they pull it back, it's just trying to shake you out. It's gone, because I think that it's been in a correction too long. The bears they're out of time. The market cycle is going to take it higher. And I think that also is an underlying message in our financial system. We need to think about what this is telling us too. Why are these things surge? But believe me, a lot of money is going to flood in once this stuff really starts going. So, all right, that's all I've got tonight. We'll try to do a live stream tomorrow, and I'll talk to you guys later.